Hello, today we are solving Jan 2023 paper Unit 2 question number 3. WIndgreen PLC is a company that builds and installs wind turbines. Okay, it installs wind turbines that produces electricity. The company is considering the possibility of building 40 wind turbines. The total cost of purchasing and installing one wind turbine will be around 1.25 million. Okay, 1.25 million. And the company has two possible sources of finance for 40 wind turbines. Okay, option A is to get a government loan for the full 50 million at an interest of 8%, and option B is a fund package from a range of sources. The details are given below like this. These are the fund sources. It could be raised from a debenture, bank loan 20 million, preference shares you issue and you get 5 million, ordinary shares worth 7 million, government grant around 10 million, and totally they are able to raise around 50 million even from this sort of fund package, but they are expected to pay some interest. Okay, here the total interest from the government loan will be around 8%. Here it is different interest rates we are seeing. Now required is calculate the weighted average cost of capital of option B. For this option, what is the weighted WACC? Okay, it is called as weighted average cost capital. So what is the formula for average weighted cost capital? So that is going to be equal to, okay, any interest, okay, towards that debt. Okay, whatever debt you have taken, you are paying the total interest. So the total interest that is paid towards the debt divided by, okay, the total loan or the debt itself. Okay, the total debt itself, and then you will take it as a percentage. So this is a given as a percentage, so you will have to multiply it with 100. What is the amount of interest? Okay, interest, what is the percentage of interest paid towards your total debt you have taken? Okay, that's the thing that's called as weighted average cost of capital. Now let's calculate. Now what are the things he is taking is all of this. Okay, all of this, these are the total debt, okay, that is he is taking. So the fund package is being raised through all of this. This is the total. These are the different types of debts. Okay, he is taking towards putting 40 wind turbines. Now the interest payment towards the same, let's calculate the interest payments. Okay, interest okay, interest, total interest paid, okay, towards all the debts. So the interest payments is going to be equal to, okay, so in pounds, here we can start calculating. The first one is 13% of 8 million. Okay, so 13% of 8 million. So that is going to be equal to 1.04 million. Okay, 13% of 8 million is 1,040,000. Okay, this is the interest payment. The next one is a bank loan. Bank loan you are paying at an interest rate of 10% for 20 million taken. So that is going to be equal to 2 million. Okay, that is going to be equal to 2 million. Then you have the preference shares, okay, for which you have to issue some interest payments. So 5% of 5 million. that is equal to 250,000. Then ordinary shares, okay, ordinary shares, it is 3% of 7 million. So that is equal to 210,000. Then government grant, the government grant is going to be equal to 0%, okay, 0% on 10 million grant, which means they don't have any interest repayments towards this, so that will be the interest payment is going to be 0, okay, so 0. Now let's add up the total interest, okay, that paid towards this debt. So how much is the interest that was paid towards the debt? That's you will have to add up. So that is going to be 1040,000 plus this plus 250 plus 2 million plus 250 plus 210,000, 250,000 plus 210,000. So the value is going to be equal to 500,000. Okay, so 500,000 pounds is the interest payments. Now let's calculate this WCC, okay, weighted average cost of capital. So that is going to be equal to, now let's also calculate what is the total debt they have, that is equal to 50 million. Here they themselves have calculated and given. So let's substitute the values and find out here. So that is going to be equal to, so that is going to be equal to 500 million divided by 50 million, okay, times 100. That is equal to 7%. We can see that they have to pay overall 7%, okay, over the total cost capital. Over the total cost capital, the interest payment is only 7%. Now next one.